Hey everyone, in this video I wanted to highlight one growth stock that's down 81% off its high that I think you might regret not buying on this dip. What is that growth stock? It is Block, formerly known as Square. So let me go through a few of its financial metrics to highlight why I think you might regret not buying it on the dip. Starting with revenue. Going back nearly a decade, I've got Block's revenue here over the trailing 12 months, and you can see the revenue explosion this company has experienced, ending at 19.69 billion. Now, I know revenue is not the most informative metric for Block because of the way it accounts for purchases and sales of Bitcoin. So profit margin, gross profit is probably the more accurate metric to look at. However, I did want to highlight the top line and show you the revenue growth the company has experienced. But let's look at the operating profit margin. So this demonstrates that Block, with its growth in revenue, it's been helping increase its operating profitability. Now you could see it is choppy, right? There is a lot of volatility in its profit margin. That's noticeable to be sure. But if you go back starting 2015 and you could draw a nice little trend line here right through, you can see that over the years, the company's operating profitability is improving. It's not yet profitable consistently on the bottom line, but if it continues at this rate, it seems like it can only be a matter of time before the company achieves profitability. Also within the company, it's got a very nice growth driver in the Cash app that's driving a lot of user growth, millions of monthly active users on the Cash app, and that's on the verge of being more effectively monetized for this company. And finally, let me talk about valuation, which will be the last point I make for why I think you might regret not buying this growth stock, is that Block is trading at the cheapest valuation it's traded for going back a couple of years. It's trading at a forward PE of 21.89. That's the cheapest it's been in a long time. It used to trade for a forward PE over 80 in the early parts of 2022. You're getting it nearly one-fourth the valuation of previous highs, and that explains the stock is down 81% off its highs. So that makes sense. So for all these reasons, I think that this stock is a bargain at these prices. Now, that being said, there is risks to the company. There are reasons why the stock is down significantly, and there is cause for concern. It's not a home run, it's not something that's guaranteed to increase in value. However, in my opinion, I think the risk versus reward is compelling for growth stock investors that are interested in purchasing Block stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.